Welcome to your Mortgage Insider Update for October the 1st. Well, start this month off with the JOLTS report, and October does look like it's going to be the month of the jobs. The Federal Reserve Chairman actually spoke yesterday and really leaned on that they're going to need more data to confirm what we're all hoping is that they'll continue a downward cycle, maybe through the end of this year with another couple of rate cuts. That's only going to be possible if we see a further deterioration in the jobs numbers. So today's JOLTS report came out just over 8 million jobs available, a little bit above expectations, so nothing to write home about. Interest rates have settled after initially kind of bouncing up, oddly enough, after the Federal Reserve cut the short-term interest rate. All the pricing improvements basically happened before the rate cut, and now we've seen rates settle back up a little bit, but in the big scheme of things, we are seeing the downward cycle, so we're going to take a look at that right now. So today we can see the 10-year Treasury down 8 basis points at 3.71%. That drop brings us back down below the 25-day average after spending the last 4 days breaking above that average. So this is what we were saying about the Fed rate cut. We actually saw a couple days of deterioration as far as interest rates going higher, breaking above the 25-day average, even with the JOLTS report coming in slightly above expectations, an overall downward move in the 10-year to bring us back in this range between 3.75 and then the 3.66% number that we haven't been able to really breach and hold below. So this is the next line in the sand, so to speak, when it comes to the 10-year and the trend of interest rates. Now, the mortgage-backed security, this is the security. A 5.5% coupon is the investor's return on that coupon, netting interest rates just over 6% to the consumer on a 30% down good credit score borrower. So we can see that 15 basis points higher today. The inverse happens with mortgage-backed securities. As the price improves or the price goes up to the investor, they have to pay more. That nets the person getting the loan, the consumer, lower interest rates, which is why we started with the 10-year. You can see the reflection there. We're similar with the 25-day average on the mortgage-backed security. We actually came below it yesterday. We actually have gone vacillated between above and below the 25-day average the last few days with really not a lot of news to set the market. So until we get that jobs number later in the week, we could hope for a poor jobs number to push in the yield down and the price higher on mortgage-backed securities. We will see and bring you an update on that next week.